welcome to the budget special of Your Trades. Well, done with the pre-budget week, and it was an exciting one at that. Thursday saw a gash, but largely we were lackluster.
Yes, indeed, and not too many trades with regards to the budget. So it'll be very interesting to see how traders and investors position themselves ahead of the budget, which is what we'll try to do for the next half an hour. Give you ideas about how to position yourself ahead of the budget. Okay, so quickly tell you how the market fared really ahead of the budget, and it was a lackluster week, you would have to say. I mean, yes, some action, yes, but overall we ended fairly flat for this week, 550 or thereabouts. There is a bit of a downward bias to the markets ahead of the budget, but thankfully Friday's action was lackluster and did not follow up after the Thursday's massive sell-off that we saw, so which is a positive thing in itself. Lots of individual stocks as well, but a flattish week before the budget session, Aisha, doesn't augur too badly.
Oh yes, 58.50 is how we've shut shop for the day, on Friday that is, and that's a loss of about 0.7%. Flat for the broader markets, marginally in the green for small caps, but yes, we have seen in the last fortnight or so, an outflow of about almost $4 billion in terms of FII. So let's just watch out in terms of how the flows as well panned out in the run-up to the budget. Sectorally and stock-specific moves, JSPL, Coal India, Tata Motors, Siemens, Tata Steel, ITC. It's a long list of laggards on the indices. HDFC Bank, Maruti, Hindalco, BOB. In fact, the Bank Nifty itself knocked down about almost 2%. Metals, consumer durables, as well as autos were the other laggards in trade. On the flip side, some gains coming in for power, oil and gas, IT, real estate, as well as the healthcare index. So yes, DLF held out, so did Wipro, Sun Pharma, Ambuja Cement, Power Grid, BPCL, and Reliance Industries and Infi were your other gainers.
Okay, so the idea of this show is now to tell you what do you as a trader as an investor do ahead of the key event, which is the budget, which is, well, slated to come out over the next 3 or 4 trading sessions. And to talk about that, we have with us, well, a power-packed lineup. Our technical experts will, of course, give their recommendations on what trades to take. But on the fundamental end, Gautam Chowcharia, Head of India Small and Mid-Cap Research at UBS, joins us right now. Gautam, good having you. Thanks so much for joining in. Yes, the show will be focused on how to position yourself ahead of the budget session, but can't really do without getting a sense from you as to what do you expect some of the key macro variables to look like. I mean, could there be a surprise in the fiscal deficit, 5.3, 4.8 for the current year and the next year? Expectations of GST, DTC, all of that, are all of these factors priced in?
Again, I think over last 2 to 3 weeks, the finance minister has gone out of his way in communicating that these are hard targets. So yes, to some extent, I think the market is now gradually believing in these numbers. But I think what will be interesting is the credibility behind these numbers. So the 4.8% number for next year, the maths behind that will be closely watched. And I don't think the credibility is completely priced in. So if he presents a credible plan towards that in terms of a realistic expenditure consolidation move, a realistic revenue increase move, and in that way to achieve that 4.8% number, I don't think that's priced in. So that will be come as a big positive for the markets.
Okay, without wasting any time, let's tell you what's in store for various sectors as well as stocks which are going to be impacted on your budget trades. And of course, the budget this time around is expected to be big bang for the oil and gas space. So let's bring in Ajay Sharma from our research desk to tell us exactly what's expected for the sector.
Well, that's correct. The oil sector is surely one of the most critical sector which is in focus ahead of the budget. The stocks have already started moving, and analysts say that in the next few days approaching the budget, the stocks will be remaining in future because of the expectations, especially the big one that the diesel subsidy could be pegged at, could be capped at around 6 rupees a litre. This announcement would come in the budget, clearly stating that there are regular price hikes in diesel which could be coming in the next few months in order to address the fiscal deficit. The government will look at capping the diesel subsidy. Also, there are expectations that there would be some policy or some announcement which could give more clarity on production sharing contracts, especially in gas assets, and hence pricing of natural gas in India. Clarity on that is expected. Also, subsidy sharing formula up till now has not been fixed. According to the finances of the government actually comes out and announces cash compensation. So it's very ad hoc in nature. Some clarity on that is also expected. Important for oil upstream companies mainly. Also, in order to encourage more domestic oil production and discourage oil imports, there could be some additional cess or duty on imported crude oil. And finally, the country is witnessing a very strong growth in the natural gas usage, and a lot of companies, domestic as well as state-run companies, are setting up natural gas terminals. So to encourage that, there could be removal of the 5% customs duty on natural gas imported from mostly from the UAE or even Australia. So these are some of the announcements which will keep oil and gas stocks in focus in the run-up to the budget.
Okay, thanks a lot for that, Ajay. So that's what the general market expects as well. Gautam, I have your report with me. You believe there could be reforms in exploration approvals, steps towards parcel diesel deregulation as well. The market believes a couple of other reforms could come out as well. What, to your mind, could be a key surprise, and how would you play the oil and gas space ahead of the budget?
I think the most important element of the oil and gas part would be a more clearer formula in terms of subsidy sharing, because I think beyond capping subsidies or beyond capping hiking diesel prices, what is still not clear is the subsidy sharing formula between the government and the oil companies. So that clarity will be very, very important from the market's perspective and specifically from the sector perspective. Because without that, even if we cap subsidies or even if we hike diesel prices, you're not really sure as to the savings from that is going to help in government's fiscal deficit consolidation, or will it actually help these companies' bottom lines. So that will be the big event to watch out for in our view. Again, that has to be a multi-year commitment, not just a one-off announcement.
Gautam, the other sector that could be in focus would be autos. I mean, the rate sensitives. There could be increase in excise duty on diesel passenger vehicles, which would, well, have maybe a negative impact on stocks like M&M, positive impact maybe on Maruti. How likely do you think this is? And do you think the markets will react accordingly if indeed this is taken into play?
Again, in our view, just a hike in diesel vehicle duties is at the margin a negative for these guys. The bigger delta for stocks like M&M, etc., would be one, the macro part as to whether this entire fiscal consolidation, how does it play out, and secondly, also in terms of diesel price hikes. If diesel prices keep getting hiked over next 6 to 12 months, so that's a bigger negative delta for them rather than just the excise duty hike. Excise duty hike to us will be more like a short-term trade, may not necessarily impact the medium-term fundamentals of, say, a diesel versus a petrol vehicle demand. The bigger delta will be the gap in diesel and petrol prices, and that's something more to watch out for rather than just excise duty. So this will be more of from a trading point of view rather than investment point of view.
Okay, time to take a quick break then on your budget trades, and as we do that, let's hear out Ashwini Gujral's budget picks.
Well, the budget generally tends to have money allocated towards the power space and towards broadly the rural sector. So it's important to have calls which may do well in any case with or without the budget. So the first call here is Rural Electrification Corporation. This is likely to get money because if power space is being promoted, chances are REC will get a share of that. So this is a buy with a stop about 230, target of 300. Also, reducing interest rates is positive for such finance companies. And the second one is M&M Finance, which is into financing of tractors, etc. Again, if there is boost to agriculture, this could get a boost. So this is a buy with a stop about 185 and looking for targets about 245.
And the one sector which is going to be a strong contender for the finance minister's gifts is going to be infrastructure. Let's bring in Megha Chadda to tell us what the street is expecting for this sector.
The infra sector, of course, has been in focus over the last few years. In fact, this time around as well from the budget, we are expecting that we could see some big bang announcements, specifically with regards to possibly the land acquisition norms, which has been a bone of contention between government authorities like NHAI as well as private developers. So some bit of clarity on that front is expected. Not just that, all infra projects, remember the big ones like road, power, ports, they get tax breaks under the Section 81A, and under which they are allowed tax breaks for the first 10 years after the project is completed. So an extension of those tax breaks would be important, because remember, if we do not see an extension of Section 80IA, we could see a cash flow impact of almost 15.5% on the profitability. Not just that, in case there's an increase in minimum alternative tax to 20%, that's also going to be important. And on the financing front, dedicated infrastructure debt funds, some announcements made to that effect, that's going to be important, as well as refinancing of existing debt. Now, remember, right now 25% of existing debts allowed to be financed via ECBs. If 100% is allowed, that's going to be a big positive. Not just that, for the power companies, if we see an import hike come in as well on power equipment, that's going to be beneficial for domestic companies like a BHEL and the likes for KEC as well. Not just that, provisioning towards restructuring of the power distribution companies at the state level, that's also going to be very important, as it will help improve receivables from the state SEBs. So on the budget day, do keep in mind the likes of L&T, BHEL, GMR, GVK, as well as the Jayaprakash Associates.
Okay, that's a long list. Thanks a lot for that, Megha. And Gautam, I was reading your report. You guys have, well, tons of expectations as well. What could realistically come out? And which are the players that you believe are likely to benefit the most from the finance minister's gifts? Power and infrastructure.
Yeah, I think realistically, we all know that government has limited resources to spend right now, and they are in a fiscally consolidating mood. So you can't really expect any big bang allocations happening through the budgetary process. But there are a few things to watch out for. One is in the entire approach towards expenditure cuts. Again, government does have some leeway in terms of being more dynamic in cutting non or wasteful expenditure, and possibly changing the skew or the mix of the expenditure towards possibly more plan or more infrastructure. So that's a possibility, and that's something to watch out for, other than anything specific scheme per se. Secondly, given it's a pre-election year, you would expect the government to focus a lot on the rural side. But again, given the resource constraints, their hands are obviously tied. But you could see schemes towards rural infrastructure development, which may not necessarily need too much of capital expenditure. But again, some change in the expenditure mix, again hypothetically from some of the rural benefit schemes going towards rural asset creation schemes. So those are the kind of things you could expect. But for me, the biggest driver would be the entire macro approach, which is the fiscal consolidation part, which is creating space for the investment cycle recovery from the private sector side. And beyond the budget, obviously, all the other administrative and legislative efforts like land acquisition, as well as the entire push towards approvals.
Okay, what about FMCG then as a sector? Navneet joins in to tell us the expectations.
Well, ITC will be in focus from the FMCG space with respect to budget speech, and well, if you look at the expectations, analysts are not expecting more than 10% hike, excise duty hike for cigarettes, because last year, in fact, it was the steepest hike in a decade, where excise duty on cigarette was increased by about 21 to 22%, and ITC had with immediate effect increased the prices, and they didn't lose any kind of market share when the excise duty was increased. So what this time around the analysts are saying, 10% hike in the excise duty has been factored in, and if it is over and above, that could be negative for the stock, but they still expect ITC to hike the prices of these cigarettes immediately in case if there is any kind of hike in excise duty. So no major negative has been seen, what is actually expected from analyst point of view. And if you look at the other expectations for the entire FMCG space, it is the GST rollout which will be positive for the entire sector, as that would lead to uniform taxation, which will propel the demand going forward and also improve the prices.
Okay, Navneet, thanks a lot for those expectations for the FMCG sector. And Gautam, guess it's a given, an excise duty hike on cigarettes.
Yeah, I think the entire market is expecting, and given the revenue pressure, it's quite a high probability event. So we should be expecting that. Again, these excise duty hikes, etc., have been more near-term blips in terms of impacting volumes, etc. So obviously the stock can react a bit on that. I think what is worthwhile to track beyond what the budget does is what the various state governments do, because I think you've seen a lot more state governments being willing to increase such duties. Again, they also face revenue pressures. So that, I think, if you add these two together, then the outcome becomes more worthwhile to watch out for. Otherwise, 10% excise duty hike is something which may not materially impact the medium-term outlook on the stock.
Okay, stay on, Gautam. Lots more to talk about. Your top bets as well coming up on the other side. But as we head into that break, here are Mitesh Thakkar's top pre-budget picks.
For the next 4 to 5 sessions, I would suggest buying into an Apollo Tyres around the 87.5 to about 88 mark, keeping a stop below 84.5. I would suggest looking out for a target of around 94, possibly even 98.
A large portion of what will happen in the budget would be in the commodity space. Yes, for the commodities as well, also for the related stocks. Titan, the sugar space, FT, MCX, all of these would be in focus. Let's get in Manisha, however, to speak about what could happen to some specific commodities in this year's budget. Manisha, tell us.
Lots of expectations coming in from the commodity sector as well from budget 2013 this time around. The biggest one, of course, is the CTT, an expectation that it could be levied this time around between 0.018 to 0.125%. Whether it comes for the whole commodity sector or only for non-agro is something that the markets really are watching out for. Apart from that, gold industry also is keeping an eye. You have seen the gold import duty gain up from 4% to 6%. That is expected to be hiked second time around this budget is what the markets are expecting. Another space that has been buzzing a lot has been sugar, decontrol. Also subsidies going into states for the subsidized PDS is something that could be coming in for this budget. Also a rise in import duty up to nearly 30 to 60% is something that the markets are expecting here. Not just this, if you look at the edible oil space, those also are expecting a rise in the import duty for the unprocessed and refined oils as well. The imports have been much on the higher side, actually record highs for the month of Jan. That could also be attracting some import duty this time around in budget.
Okay, Manisha, we'll leave it at that. Gautam, I want to get you in on the commodity space. Sugar, Titan, FT, MCX, a lot at stake for these players.
Yeah, I think we do not cover a lot of them, but on the gold names, clearly the government's efforts has been towards discouraging consumption locally. So you could see measures on that, I think. But more than the gold import duty, which may not necessarily play a big part in discouraging local consumption, what would be interesting is if they can create avenues for the local consumer or investor to not go for gold in the physical form, and that could possibly have a more meaningful role. For the stock specifically, again, say something like Titan, then if these measures play out in terms of discouraging local demand, then obviously at the margin it is negative. But again, for something like Titan, what will be more relevant beyond the specific gold measures will be the macro environment. So the consumption trends will be much more pertinent for Titan.
Gautam, the viewers really want to know, what is it that you or UBS as a house is betting on ahead of the budget? Your top 1 or 2 ideas ahead of the budget?
For us, actually, this is a much more a macro budget rather than a sector-specific events which we watch out for in the budget as in the past few years. So this is much more about a macro budget, and we are expecting this budget to play a big role in turning around the entire economic structure which we have been seeing for the last few years, and that it should help create space for investment cycle to pick up. It should create space for even monetary easing to begin happening in a much bigger way through the year. So clearly, top down, we would prefer names in the banking and infra cap good space. So our top 2 picks is SBI and L&T to play into this budget.
Gautam Charcharia, really appreciate you taking the time out and joining us on this leg of Your Budget Trades, the pre-budget special. Thanks for joining in today. With that, it's a wrap from the team, and thanks from the team that put the show together. Of course, as we wrap up the show, here are Dr. C.K. Narayan with his top ideas ahead of the budget.
For the budget, we have to clearly look at something which might actually get favored through some policy, and I would therefore look for housing finance and infrastructure as being 2 areas where we might get some sort of positive announcements. So LIC housing finance in the region of about 235-40 is a buy. with a 3 to 6 month target at about 280. The second buy I would recommend pre-budget would be GMR Infrastructure at about 18 rupees with a 12-month target at about 35 rupees.